If you think that waking up at 5 a.m. in the morning and running into the woods 5 miles is going to make you a profitable trader, well, I got bad news for you because it won't. Because over the last few years I thought that that perfect routine will make me profitable. Well, guess what? It didn't. What actually got me profitable is only two things, and in this video I'm gonna show you exactly what they are. So forget the meditation and that nonsense, because in today's video I'm gonna show you what actually works. And I can say that with certainty because this year alone I made over 6 figures, of course with proof of everything. So if you're serious about leveling up and becoming profitable, stick till the end. As you can see, the last month, August of 2025, I made $18,000, and this is the slowest month of the year. And also the month before this I made $25,000, which is literally more than $40,000 in 2 months. And this may not be hundreds of thousands of dollars like those fake demo gurus out there, but this is honest, true results from the verified tracker. You can see every single trade I took, every single day. I also have all the trades recap on the channel, proof of absolutely everything. So let's just get started with the video. So the goal of today's video is going to be for you to manage to pass a funded challenge, also for you to follow all the rules that are required to pass a challenge and that are required to literally get a payout and everything, and also to consistently pull in payouts. And trust me, this may seem simple and everybody presents it as simple, like just passing a challenge, like following, trading a strategy, risking normally. Like, I'm actually going to take it apart and put it step by step on exactly how you can do it in the live market, because trust me, to consistently every single month, almost every other week, to pull in payouts, not everybody can do that. So I'm going to exactly show you what you need to do in the live markets. So the step number 1 is mental framework, and I know a lot of you are just going to skip all of this because a lot of guys think they are the smartest, they just know everything, but I'm honestly going to teach you everything required. So let's start with a mental framework. So the first thing you need to understand is that a lot of people expect and think of trading this way. They think that trading is just a straight curve to the upside that is exponential and that just grows to the upside like this. So they start and they think they're going to pass their funded account and they are just going to scale so fast and just in a short period amount of time. And what is actually reality is this: trading is actually a very slow paced game that you literally need to beat slowly and slowly. So basically what people expect is this, but what actually happens is this: a great huge downfall, which trust me, I had, my friends had who are traders. Every single one of like successful traders thought that trading was this and had such a huge come down to absolute zero, to no earnings at all. And then after they had this come down, everybody had to actually go this way and go slowly, because nobody is ever going to succeed this way. So you gotta instantly understand that you need to scale up slowly but steadily, and you are never going to have this where you fall to nothing. This happens in the worst cases, when you quit your job, when there is something tough in the life. This is going to happen and you're going to fall to absolutely nothing, and trust me, it is going to break you. So you instantly need to understand that the truth of trading is a slow and steady come up. Step number 2 is going to be, you need to understand how and what to risk. So basically, first of all, you gotta pick a fixed risk. So it's gotta be a fixed, because otherwise it's not gonna work. I'm gonna explain you in a shortly. So it's ideally gonna be 2% on a challenges. So on a challenges you can go a little bit heavier. I would not advise full porting it because you're just gonna waste money on blowing challenges, but you can go a little bit heavier. Then we have a 1% on a funded account. This is just a normal risk. You can do this, you can do 0.5. I usually like to do 1% risk because it is going to be pretty hard to literally get 10 losses in a row, but always you gotta have that threshold. So 1% on the funded accounts, 2% on a funded challenges. And of course, the most important thing ever, maximum of 2 losses in a single day. So if you ever have a loss, then you gotta wait for a perfect setup, you take the second loss, done. No exception, because what if you take the third loss? You are literally so down in the red for the day, and it's going to be so hard to come up from that. So trust me, 2 losses is a maximum of ever taking a loss in a day. So trust me, do not ever go past 2 losses, because it is going to be blowing everything in at that point. So I'm gonna explain to you why do you have to pick a fixed risk. So basically, if you risk a 1%, so let's make a little bit of a chart here. So you make a 1% like this, then let's say you lose 1%, then you make, let's say, 2 risk to reward and you make 2%, and then you make, let's say, 1% again like this, and now you say, oh, I made 2 wins in a row, let's scale up a bit. I'm just gonna risk a little bit more. And what happens? You risk double than you should have, and instead of losing just like this little 1%, because when you scale up, it's always going to be a loss you take. Trust me, that is just the normal thing in trading. Like, once you scale up the risk, it is always going to be losses. So instead of it just being like this, a little 1% risk, you are going to pull back all the way down here. And once you are down here, because you risk twice as much, then you are going to say, oh shit, I shouldn't have done that, I'm going to risk normal again. And then you are doing this 1% again, 1% back, slowly come up. And then if you make that same mistake, you're always going to make those step forward and then 2 steps back. So if you are always having fixed risk, you're always going to lose right amount of how much you make. So you are never going to make something and then risk so much more and then lose it all. So trust me, fixed risk is a must. The step number 3 is to have only one single strategy. So here I'm gonna hook you up with something free. So trade only one model that you master. So this is a must, guys. If you think of trading few different models in the market, you're not gonna succeed. You're just not gonna succeed. I'm gonna tell you that instantly and straightforward. I'm never gonna lie to you. Like, nobody ever succeeded from trading 3 strategies in the market, and it's going to be to never take a trade outside the rules. Why? Because if you need 3 confluences for a trade and you take confluence and you take trade with 2 confluences, you are just not following the rules. You're gonna blow funded accounts. That setup is not valid and it's never gonna work out. So the free thing I'm gonna give you, because I think you guys deserve it, because you came to this part of the video, if you want to claim my strategy playbook, which I'm gonna go through now, and also have a perfect checklist of what to do in the live market, you can see it on the screen how it looks. You can go down there to the description and press the link and you're just gonna claim it. So let me show you my whole strategy, my whole model quickly, and then I'm gonna do the live example on the actual chart. So here it is, basically the normal market. Once you come to the market, the last few structures, the last few levels are going to look like this. So it's always going to be some kind of highs, some kind of lows, and this is just the basic market structure. So what we are gonna look at, we are going to look at highs and lows. Why? Because look at these boxes. What do you think these boxes represent? They represent orders in the market. So if market is going to the upside like this, everybody is, let's say, going to enter buys. Where are they going to enter? They are going to enter somewhere right here, because they are expecting pullback and a push. But what is going to happen when they enter right here? Where are they going to put their stop losses? They are going to put their stop losses below the lows, and of course above the highs right here. So these are going to be stop losses and these are going to be stop losses. And you gotta know that not everybody can make money in the market. So everybody in the market needs to either win or lose, so the other side can win or lose. So basically, if the institution, banks and everybody like that, the huge institution, trading institutions are winning, 99% of traders gotta be losing, because that money cannot appear out of nowhere. Somebody's gotta lose for everybody else to win. So 99% of traders are unfortunately going to lose. It is just like that, and they are just going to trade with basic logic. Like, if market is heading to the upside like this, they are just going to want to buy the market here, and they're just going to want to enter simple trades like this. So what banks and the institutions do is they basically manipulate the market and sweep those stop losses that I just showed you, that I put. So basically this low right here, because these boxes represent stop losses, they are going to sweep them, so manipulate the market, pump market to the downside, because they are trading with trillions of dollars and they can actually move the market, and they are just going to manipulate these stop losses, so everybody gets stopped out, and then they are going to pump the market because they are going to have enough orders down here to enter the market with like trillions and billions of dollars. Because trust me, in the forex exchange and in all the stocks, there is trillions that move through the market every single hour, every single day. It is just insane amount of money, so they are going to need to always do these kind of manipulations. So what we are going to do is, because we know that these manipulations are going to happen, we are not going to trade like this. We are always going to wait for this kind of manipulation to happen, for some kind of low or high to get swept, and after that we are just going to target what? Another high like this, and that's it. And now let me just show you how I actually enter the market. So after I spot all of this on, let's say, 15-minute time frame, which is the time frame I like to use, I go down to the 1, 2 or 3 minute, mostly 1 minute time frame, and I just execute with this exact entry model. So the entry model I use, everybody knows it. It is a fair value gap like this. So a fair value gap, it is just a hole in the market, and what I wait is, after a liquidity sweep, I look for the last fair value gap. So this is the last fair value gap, and I just enter when the market closes above it. So I actually need this candle right here to close above the last fair value gap for me to enter to the upside, and it is that simple. So a last fair value gap in the whole leg. Once we sweep the liquidity, we want to trade to the upside. I wait for the close above this fair value gap, I enter to the upside. It is that simple. Okay, so here we are at the live chart. So instantly what you can spot is that market is going to the downside like this, then to the upside, and then again to the downside, and that is just doing the same thing over and over again. So what most people are going to think is going to happen is a little pullback like this, and then a straight dump after that. But what is actually going to happen is, after they enter, let's say, off of this order block or something like this, what is going to happen? So let's say they want to enter the market like this, put their stop losses either above here or like above the high right here, and let's just see what is going to happen. So market tucks them in, and what happens? They get stopped out. So let's just go and head and go to the 1 minute time frame here before they get stopped out. So we are going to draw a line of this liquidity, because this high is basically stop losses, and also we can draw a line of these lows down here, which we can target. So right now at the 1 minute chart we have this. So basically, if we fast forward the market to where the sweep is going to happen, so right now we still didn't sweep it, so let's just wait and see if we are going to get it. And here it is. So this right here, it is basically where the most people just got stopped out. Literally everybody in the market got stopped out right here. And what can happen next is, we need to wait for some kind of entry so we can target to the downside. So we cannot just blindly enter to the downside, because we cannot be sure that market wants to reverse right now. So we need a confluence of a last fair value gap. So this is a fair value gap, and this is a fair value gap right here. It is not important. We want both to get inversed. It is very logical. If we want market to go to the downside, we need these fair value gaps to get inversed, because let's say if only this one gets inversed, we are still in this fair value gap, which can also reverse the market. So let's just wait to see if we reversed it to the downside. So looks like we are going to the downside. We still didn't close, and there is the close of it. So what we can do right now, we can enter the trade. So we execute trade like this on the close. So actually on the actual close we execute a trade. What we can do, we can put our stop losses on top of the candle that inversed it, or we can put it on top of the fair value gap that we inverse. So we inverse these two fair value gaps, so we can just put our trade like this. And what we can actually target is this low that we just marked out previously. And you can see that we have a very great risk to reward. So I didn't risk quite a lot, so we are going to risk, let's say, this much, and this is the correct risk. So if we risk $1,000 on this trade, we would make $4,800. So this is basically some kind of normal risk with a $100,000 account, because if you have a $100,000 funded account, it's basically a 1% risk. And if you risk $1,000 on this trade, you are basically going to make almost $5,000. As you can see right here, this is not the exact risk, but it is just an example. So let's see how this trade is basically going. Oh, it played out way too fast for me to even say anything. So you can see beautifully right here, after we executed this trade, because market is no longer having anything to support it to go to the upside, because we entered on a disrespect of this fair value gap, you can see how beautifully market dumped for a 5 risk to reward. So guys, if you want to claim this checklist, don't forget to go down there to the description and basically just press the link next to the free PDF, and there you are going to be able to claim it. And also guys, if you want to skip all the hard learning and losing in the YouTube videos and everything, you can get to work with me personally one-on-one. So I basically run a one-on-one mentorship where I mentor people one-on-one. So if you are interested in that, you can check that out down there in the description. And basically, if you like the video, you can leave a subscribe, you can like, you can comment, and basically that's going to be it for this video. I hope you enjoyed it, and I'm gonna see you in the next one. Peace.